Welcome back. I'm Pratap here. Today is the 17th April 2025. In this video, let us evaluate the performance of high liquidity zones generated in the previous end of the day report. Even before that, all of you please note we are providing complete free training on supply demand zone price action. You might be knowing it is a highly expensive training course, but we are providing complete free training and all the training lessons are already available at our NeoStock YouTube channel. You can access all the training lessons by clicking the tab posts at our homepage. Some of you might be seeing the tab community. In that case, click on that community tab. You get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into supply demand zone price action course YouTube playlist. I kept all the training lessons in this playlist. You can access all the training lessons. You just scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one. But according to my training instructions mentioned at our Telegram channel, I provided the link to our Telegram channel in this video description. So join at our Telegram channel. At the top of the Telegram channel window, you can find pinned messages. Go to the pinned messages, and one of the messages are having all the training instructions. So please learn this course according to those training instructions. Then it will be helpful to you to become a very good independent trader in the coming months time period. Please make use of this opportunity. Now let's get into the performance evaluation of our high liquidity zones. Yesterday, end of the day report, we identified 1, 2, 3, 4, 5, 6, 7, 8, 9 high liquidity zones from daily and 75 minutes time frame. Out of these 9, today you got 4 trades from 3 stocks and all 4 are executed one after one. That means for the same capital, you might have taken the trades in all these trades. Out of these 4, 3 are successful trades. So let us evaluate these 4 trades first according to the order they executed today. The first one is Ramco Cement. So this is a rally-based rally. It is a 75-minute zone. Stocks near 75 minutes high liquidity demand zone. This is what identified by our software. And this 75-minute zone we fine-tuned up to 5 minutes time frame. Okay, the first one is first let us get into the next time frame, 15 minutes time frame. In the 15 minutes time frame, you have, this is the rally candle, you have 2 base candles and then you have a rally candle, rally base rally. This is a high explosive leg out candle. And this 15-minute zone, again fine-tuned with 5 minutes time frame. See here you have a drop candle, 2 base candles and then a rally candle and a medium size leg candle and again another rally candle, follow through candles. Okay, so with this 5-minute zone, your prices entered today. At what time they entered? Today morning 9:35 minutes candle. You got the trade and here you have a 15 minutes target. Let's go to the 15 minutes time frame. See here you have a rally base drop. This is acting as a high liquidity zone. Several times this zone is tested and finally today it is violated. But here anyway it is our target zone. And when you got the trade, we got the trade at morning 9:30. 5 minutes candle and when it reached the target at 9:45. So that means within 15 minutes your trade is completed. And how much profit it has given? It has given 8,287 rupees profit, which is the 5.6% ROI as per one futures margin cost. Okay. And after that, you got one more trade, but this is a dynamic zone creation. What is dynamic entry zone? During live market, the fine-tuned zones will be created, new fine-tuned zones within your high liquidity zone. In that new fine-tuned zone, next retracement on the same day, again prices will enter and you get a trade. See here, a drop base rally is created within the 15-minute zone. See, this is the 15 minutes area. Fine-tuned 15 minutes area, this 5-minute zone is created. Sometimes these fine-tuned dynamic 5-minute zones sometimes may be a little weak sometimes. But if that fine-tuned 5-minute zone is inside a newly created 15-minute zone, then during the live market, they are very, very strong. Let us assume a 15 minutes fine-tuned zone inside our 75-minute zone is created on the live market. That is dynamic zone. That 15-minute zone, you have a fine-tuned 5-minute zone. That will be much stronger than a 5-minute zone directly creating inside a 15 minutes already fine-tuned 15-minute zone. Of course, the fine-tuned 5-minute zone is also strong, no doubt in that. But if it is created in the newly created 15 zone, that is much stronger. Okay, now the question is it a much stronger or a little weak compared to that? Because this 5-minute zone dynamically, which is there inside already existing 15-minute zone, right? But go to 15 minutes time frame, you will see the magic. So I am changing the time frame to 15 minutes. See, 15 minutes. A drop base rally is created. LOTL zone actually it is. See, already we have a 15-minute zone, rally, 2 base candles and rally. This is the 15-minute zone. Inside that 15-minute zone, again a drop base rally is created. I didn't draw because already we have a 15-minute zone, origin is there. That's why I didn't draw the newly created in the same area. But if you draw, the zone will be like this. LOTL zone. You already have a zone. This is LOTL zone. So within this newly created LOTL 15-minute zone in the live market, see everything created in today's market. In today's market, live market, any zones create, we call them as dynamic zones. The technical name we are using is dynamic zone. Dynamic zone means the zone that is created in today's live market. Okay, in this dynamic zone is a LOTL zone. Within this area, now you see the 5-minute zone is created. This is the one. Drop base rally. So let me delete this 15 because anyway it is in the origin it is created. So that's why this drop base rally you should not miss. That gives you a very good strong trade opportunity. See again prices. See, first you already got a trade. It reached the target. Again prices came. Now a dynamic 15-minute zone is created. Inside that 15 minutes you have this fine-tuned 5-minute zone is created. Prices moved up. Again prices came back. They retraced back and came back and gave you another trade. At what time? 11 o'clock you got this trade. First trade you got at 9:30. You closed it at 9:45. Next trade you got at 11 o'clock. And when you closed the trade at 12:15. So within 1 hour 15. First trade completed within 15 minutes. But second trade it took almost 1 hour or 1 hour 15 minutes time. That's why the market starting any trade opportunities you get profits within short period. Especially morning below 9:30, between 9:15 and 9:30 trades, a lot of volatility will be there, huge volatility. Short period you get profits. Now from the same zone only you got the trade, but this time slowly it moved. It took almost 1 hour time to reach, 1 hour 15 minutes time. Okay, after closing this trade, how much profit you got? The second trade. Second trade gave you 6,715 rupees profit, which gave you 4.6% ROA. Same capital you used. You did not use two different capitals. First trade closed and capital released. The same capital you used it for buying the second trade. Okay, now second trade is also completed, right? Okay, after that, next you got another trade in Bajaj Finserv. Bajaj Finserv, already I explained in the previous video how I fine-tuned this zone. This is a daily zone. I think yesterday we discussed it. This rally-based drop, yesterday I explained. Oh, sorry. So rally-based drop, and this one fine-tuned with 75 minutes time frame. Drop, 2 base candles and drop. And this is the 75-minute zone inside daily. Within this 75 minutes, again fine-tuned with 15 minutes. So yesterday we have drawn the 15-minute zone. We have a rally, 1, 2, 3 base candles, drop and a drop candle follow through. So within this area, again you have drawn a 5-minute zone. You have a drop, you have 1, 2, 3 base candles, you have a drop. So this is the one we drawn yesterday. But yesterday price did not reach. Once again I saw our software listed this zone, and today we got the trade. And what is the blue color line I have drawn above? This is the stop buffer value. And today we got the trade at 1250 candle. But we closed the trade at 11:15 previous trade. Now this trade, same capital, we got the trade. And 12:50 we got the trade, and after that it was maybe the demand is very strong. See, this zone is holding. Institutions are fighting. Maybe the demand consumed all the supply here. And finally in this candle, which candle? At 13.5 candle. If you go to 1 minute time frame, you get better clarity. So this is 1 minute candle at 13.7 candle. Your stop buffer value is also violated. Here you would have exited your trade. You booked the loss. And how much loss? 2,650 rupees loss, including stop buffer, which is 1.5%. Negative ROA, minus 1.5% ROA. This is the loss equivalent. So up to maximum 2% we will accept. So definitely this is below 2%, 1.5. But you will be, earlier you already got 2 profits. This is the one stopped out. Okay, at what time? Remember the time interval. You got stopped out at a 13.7 candle. 13 minutes 7. Immediately after closing, the next second minute after closing, that is 13.9. 13.9, you got the trade, another trade. Which stock? Bank of India. Bank of India is a 75-minute zone identified by our software. How our software identified this zone? So very tricky zone. Our software identified this zone as a drop candle. 1, 2, 3, 4, 5, 6 base candles and then a drop candle. Here it identified an imbalance here in this candle. That way it identified. This is based on imbalance this zone is identified. See, leg out is not strong, but it identified an imbalance here. But prices earlier they moved small candles. This is the range. And now this is identified as an high liquidity zone. This is identified as an high liquidity zone. And what happened in the recent time interval? Prices entered into this zone when? On 3rd April. Actually here you don't have a proper structure. Go to 15 minutes time frame. The 15-minute structures are not really good here. Maybe here you may say failed ERC, 2 base candles and drop, but this is also looks like a ERC. That's why And here you have maybe some drop base rally is here. Sorry, rally base drop. But leg out is not really great. But okay, you can consider. Because imbalance, based on imbalances, clear imbalance. You are seeing follow through candles. You are seeing here small. But anyway, all these things are gone in the recent time, 3rd April, right? 3rd April, prices entered into that zone. See? 3rd April, it created a rally base drop. A 15-minute zone is created. So this is the one we fine-tuned, a perfect structure, rally base drop, 15 minutes. Within the 15 minutes, we should fine-tune with 5 minutes time frame. And 5 minutes, you see, you have a drop, you have a base, and you have a drop, base, drop. But the risk is very high, right? See here, if I draw a zone, the risk is very high. For the risk management, what you have to do, you need to fine tune. So what I am planning? Type 3 proximal. Type 3 means within our 2% risk level, this zone will be there, including stop buffer. So that's why type 3. But type 3, what is the disadvantage? Many times you will be missing the trade. Prices reach somewhere here and it will count. But you can't do anything. You can't take the huge risk beyond 2% risk. You can't take the trade. So that is the reason why type 3 is okay. If you have some fear, you may lose, keep some entry buffer below and you can plan the trade. But okay, today it reached the zone. That is a different story. But sometimes if you have any fear, keep some entry buffer below this. So like that you can keep some entry buffer. That way you can plan. If it is within your risk management, that way you can plan the trade. Not a problem. In case if you have fears, when you go for type 3 proximal. But this zone is different. Type 3 is also you got enough risk here. It's not very small risk. But it is within 2% level. Today, we got exactly the trade. Price entered into that zone and we got the trade. When you got the trade, 13.5 candle, 5 minutes candle, you may say that 13.5 we were already there in the Bajaj Finserv. How can we take a trade? So this is, if you look into 1 minute, you get clarity. This is a 5 minutes candle. If you look into 1 minute, you will see at 13.9 minutes you got. Bajaj Finserv, we closed because stop loss. That was a stop loss is triggered at 13.7, right? This is 13.9. Go to 1 minute time frame. You will get clarity. See, at 1 minute, at 13.9. This is at 13.9. Immediately after Bajaj, in this candle you closed, maybe in this candle you closed Bajaj Finserv. After that, 1 more minute is there, and immediately next, the trade is triggered, and you would have taken a trade here, and then after that, sharply prices came down, reached this zone. But remember, this is not your target. Your target is 15 minutes target. The 15 minutes target is here. You have a rally, base, rally, and follow through candle. Then what is this target, you may ask? This is not there in our list in the earlier, because this is the nearest 15. But what's happening? This is the area prices are, something is holding the prices. It's not letting the prices go up to reach the 15. So that means some high liquidity area will be there. So first look into the 5 minutes. 5 minutes, it is not clear. No proper zone is here. So go to the 1 minute. You have 1 minute high liquidity zone. You have a drop, 2 base candles and rally. And this is the area prices entered first time. Okay, first time fine. Because many times, any zones, 1 or 2 times it will test, and after that the zone will be violated. Second time is also tested. Then immediately you should seriously look into this. Is it a high liquidity area? Again, third time is also tested. If anybody is having doubt, you can book your profit here. Still, if you did not book that profit, again fourth time it gave you the trade opportunity, the last time. Actually 5 times it gave. This is the first time, this is the second time, this is the third time. Came very close, third time. This is the fourth time. Here you should book the profit. In case due to any reason you did not book, you got one more opportunity here. By this time, definitely we have to realize this is the high liquidity area. Actually, you have to realize here itself, you should realize this is the high liquidity. And once again it came back, this is the area we must book the profit. There is no other excuse. Any reason, last opportunity you got, if any reason you fail to book, you are in a dilemma. Again moved up, again came. This is the time you have to, at any cost, you have to book the profit. Because it is continuously holding. Why any cost you have to? Because we are nearing to the closing hour of the market. The last opportunity, it is at 14:15, 2 o'clock 15 minutes. If you are in the cash segment, probably in next 15 minutes, brokers automatically close your trade. At 2:30 or 2:45. Some brokers will close your trades at 2:30 or some maybe at 2:45. Last 45 minutes or 1 hour. Okay, if it is F&O, you can hold. So that is the reason why this 1 minute zone did not let the prices get into this 15 minutes target today. So that is the way you will book the profit here. Until this 1 minute high liquidity area, Bank of India has given you a profit 5,741 rupees, which is 4.3% ROI as per your futures margin cost. Using using the same capital, today you would have got all the 4 trades. Of course, one is stopped out. But even then, what could have been your total profit? Your total profit would have been 18,093 rupees. Say 18,000 rupees profit you got, even after deducting this loss. On the same capital. And total ROI on the same capital, even after deducting this loss, you would have got 13% return on the investment you would have got. Okay. So this is about all the trades we got. Other than that, the stocks we did not get trades. Let us quickly go through. CG Power, yesterday we discussed CG Power. This is a daily high liquidity zone. CG Power, yesterday I told you this zone, there is a zone. 75 minutes, 15 minutes structure is not proper. It will be violated. Please refer yesterday's video. Clearly we discussed this. See, today this zone is gone because it doesn't have any 15 minutes order flow. Look into the 75. Failed ERC base drop yesterday. I told you the 15 minute structure is not good. Lot of consolidation took place here. I told you this zone will be easily violated. That is what happened today. The zone is gone. Okay, actually this entire zone probably maybe tomorrow entire zone might be deleted because by the time it reaches here almost this is at 11 o'clock. Okay, fine. And the next one is Dabur. Dabur is also a daily zone. Drop base drop. This zone I have drawn today. This is we identified yesterday only. So I drawn it today. We have a 75 minute zone. We have a rally, base, drop. Hide the candle, you will get clarity. So this is a rally, base and drop. Or even if you consider this is small candle, this also you want to keep a base. Still the zone will be same. Rally, this is part of within this base candle. That way also the rally to base candles drop. Either way you can draw. And go to 15 minutes, the structure is not good. See here. Let me hide the candle, you get clarity. See, this is a failed ERC candle, large candle. After that, drop candle. In between, no base candles. That's why this zone will be violated easily. But anyway, today price did not enter in the zone. And LTF, L&T Finance, yesterday we discussed it. Previously we analyzed this stock. I told you here one LTF, that was our trade plan, but today price did not enter. And also in this zone also previously we have drawn a 75-minute zone. Previously we have drawn this. I didn't fine tune previously because this drop structure is not good on 15 minutes time frame. That's why we left it previously. One, two, three, four, five, 6 candles and drop. 1, 2, 3, 4, 5, 6 candles and drop. Why didn't? Maybe I'm not convinced with this leg out or something. Maybe 5-minute structure is also may not be good. That way I would have left that. Let's look into the 5 minutes. Where is it? Here. Five minutes is okay. Rally based drop is there. Maybe the 15-minute structure is not good at the time. Maybe I might have left this. 5 minutes, this is okay because we have rally based drop, but 15 minutes should support. 15 minutes I didn't draw. Maybe in the previous video, please check the reasons why I am not convinced with this zone and left that zone at that time. You will understand. Maybe this is a leg out or maybe something I might not have win. So that's why I left that. Anyways, today you see this zone is gone. And next one is a PFC. Power Finance Corporation, yesterday we discussed. This is also a daily zone. Previously I explained how I fine-tuned. Please look into the old videos. I'm not repeating again. Anyway, price did not enter. We did not get the trade. And Supreme Industries. Also we discussed previously. All these zones we have drawn previously. So please look into the previous videos. I think maybe yesterday I might have explained or maybe previous videos. So this also we did not get the trade. And last one is Tata Power. This also Tata Power, yesterday I have explained in yesterday's video how I have drawn Tata Power. Yesterday we discussed. Please look into yesterday's video. Today it entered into the zone a little, but not up to the fine-tuned horizon. Here we have an horizon. So price did not enter into that horizon. So these are the high liquidity zones identified from the previous report. I wish this analysis will be helpful to you. Let's all meet again in our next video. Thank you.